Today, I'm going to talk about one of the commentators' questions of, can I speak about M2? And I'd like to speak about M2. But first, I want to go back and say, if you remember after Liberation Day, I did a video and I said that the asset managers are now going to move away from the dollar. But there's only 4 buckets for them to choose from. You can go to the dollar, you can go to the yen, you can go to the euro, or you can go to the renminbi, China. They're your 4. You need deep markets for big time asset managers. We're not talking about individuals, okay? Then I said we have what I call 2 kind of like alternative currencies. And one of them is the Swiss franc. And if you notice, I think now you have to pay 178 or 189 to own the Swiss franc. You pay, not them. You pay them 1.89%. And then gold is up. Now in that video, I mentioned that I am now looking at crypto, because crypto, every time we've had a problem before, crypto has gone down. So it doesn't seem like it was a good alternative to maintain your wealth when something goes wrong in the market, okay? But after Liberation Day, yes, crypto went down around 3,000, I think, 2,500 to 3,500, somewhere around there. But by the time I did the video, it was up to 3,000. It was like 92,000, if I remember correctly, 92, 93,000. And that was the first time. All right, so why M2 and why this? So first, I believe, as everyone knows who follows this channel, that the market is driven by liquidity. That's the number one thing. Now, do stocks inside the market go up and down based on earnings and all this other stuff? Absolutely, right? But if we don't have liquidity, you don't have a market, all right? Now we have this new thing called risk assets, that risk assets go up when we have QE. Everyone believes that. I mean, I have people I follow on the crypto, and they all praying for QE because they know what happened with crypto after QE, all right? So, M2, what's going on? Well, after I saw crypto, I started thinking about, why is crypto, has it now actually changed over, right? Has it gone from from what was perceived as maybe an alternative investment to an alternative investment, because now it was up during Liberation time frame, and now it's even up higher now. It's like 104 or something like that, okay? 108, I think it is, all right? So I started to look in to see what could be causing crypto to go up. Has there been a fundamental change in what people believe it is, or is there liquidity being added into the market? So here's M2. And as you can see, we just set a new high in M2. We don't get another read, I think, until June something, June 15th or 17th. I'm sure it's going to be up from here. But we just set, at the last reading with the St. Louis Fed, an all-time high in M2. So the first thing I wanted to know is, how does M2 go up, right? What happens? Are they printing money, or, what happened? And they say here that the Fed buys U.S. Treasuries and mortgage-backed securities from the banks, injecting money into the economy. The Fed creates new bank reserves electronically to purchase the bond, i.e. they print money, all right? So now the banks have more reserves to lend, increasing deposits, which is M2. So during quantitative easing, QE, the Fed bought trillions in bonds, and massively expanding M2, okay? So obviously we're not having a massive growth in M2, but it is still moving up. And before 2020, the Fed could reduce the reserve ratio for the banks. But guess what? Since 2020, we have 0 reserve requirements for our banks. 0. Also, they can cut the rates, and you can see in the first one, when we go near 0, we had a surge in lending, because free money, and M2 had growth. And number 5 here is the Fed buys long-term bonds, pushing down long-term rates and flooding the bank's reserves. This is QE, which caused M2 to double in a decade. M2 also grows through stimulus, right? Like we had in COVID, And that caused M2 to spike by $4 trillion. So it seems on the surface that the number one way that we grow our M2 is through QE or some kind of stimulus, all right? So whether we're buying the bonds or we're adding reserves into the system, M2 grows. Or we cut the interest rates to zero and lending grows, M2 grows. So M2 is anything that can be invested, okay? So that's the first thing. So I wanted to take another closer look at M2, but not, let's say, over 30 years. So here's M2 over the last 5 years, and we see a little downtrend there when we hit there, where we hit our all-time high. But literally, the bottom of the trowel here was on October 30th, 2023, okay? So that M2 was trending down until that date. And we were about $20.5 trillion. Now we're over $22 trillion. And so I wanted to ask, so I asked DeepSeek, were there any financial events that happened in September of 2023 that would then cause the Fed to start expanding M2 again? So there's a bunch of things. You have to make up your mind what you think is important. But the first thing is that, you know, September was the month that we paused our interest rate increases, all right? And then we had the budget crisis, then oil prices surged. We had the Evergrande crisis in China, where with their property melting down. The Bank of Japan keeps their ultra loose policy. We had the UAW strike. And number 7 here is Bitcoin and crypto slump. Bitcoin dropped below 27,000 as the risk-off sentiment grew from the Fed's hawkishness and macroeconomic uncertainty. All right, so think about this. Our M2 hit its bottom when Bitcoin hit below $27,000 a coin, all right? Now, we're at 22 trillion, and Bitcoin's at 108,000. And you can see here at the chart, October 30th is when we started printing into M2 again, driving up M2, and now you see the effects on the Bitcoin. So for whatever reason, M2 is growing again. And our risk-on assets have been moving up, and they've been moving up strongly because they're incredibly tied to the liquidity of the market, okay? And so when I look at M2, what I'm looking at is, are they giving the market enough liquidity for it to continue to move up? So the first thing we look at is our risk-on assets. You know, the Teslas, look at Tesla, right? Sales down 49%, doesn't matter, up goes the stock. It's a risk-on market, and individual stocks are less important during a risk-on liquidity surge, all right? Not saying that it goes forever. I'm just saying that liquidity is the big dog when it comes to the market going up, or illiquidity when it's going down, all right? So, as long as now M2, as you just saw in the last chart, you can see there on the right, it's turned down a little bit. Is that going to continue? What's going on there? We don't understand what's happening here, but if this is the beginning, and you can go back and look there and whatever that was, 2020, when we had almost the exact same down there, right before we had this little bowl here. And what happened? You know, Bitcoin went down below $27,000. So the number one thing I watch in the market is, what is liquidity doing? 2, how the risk on assets acting. And then make up my mind what's going on. So what do you think? Is liquidity back? Is it back and now gone? You know, like and follow, tell me in the comments, and thank you for listening.